Really started the new year with a whole new decade with hope and expectations and, with the whole theme of roaring 20s. We started the year with several geopolitical tensions, but somewhere along the way, some wisdom and wise counsel prevailed, and so far, things seem to be under control. And the human spirit of always being positive no matter what the odds. And so we are here at the India Rendezvous 2020 with some 700 delegates with a good mix of insurers, brokers, reinsurers from some 40 countries around the world. This year, we settled for the theme of a new insurance model for the insurance market. New is always exciting and full of promises. And actually, we have some 33 speakers, panelists, and moderators over the next 2 mornings to drive home the hopes, aims, wonders, and solutions that this model can bring to the market. This is indeed a very ambitious program and does not miss out with all the panels and sessions. It doesn't miss out on InsurTech, cyber fears and exposures, as well as the climate crisis, even at a time when motor and health are getting a renewed interest all over.
Let me turn the clock back for a moment. In the 1940s, one of the oldest and now very well-established broking houses of India was still to commence operations. Reading the newspaper, the founder glanced upon an insurance query. He wrote a postcard to the given address in the UK, most possibly an EC3 address, the square mile as we call it. And maybe that postcard took a month or maybe more to reach it. And maybe another month or possibly more elapsed before a reply was received. The rest, as they say, is history. The point that I'm striving to drive is the much touted TAT, the turnaround time. The current generation demands and gets the desirables immediately. Delayed gratification is a thing of the past. Insurance is no exception. And this is applicable not only to policy issuance, but more importantly, to claims as well. A great deal of work has been done in displaying promptitude and has become the USP, differentiating one company from another. Additionally, the market is also moving towards charging premium on the basis of claims experience even in the retail sector. No one wants to subsidize the next man. We all want to be rewarded for prudency and would like to see the reckless eggs pay a higher amount for their trespasses. This has led to a considerable amount of interest in new technology like blockchain. The insurance industry has invested considerably in technologies in not only lines of business like motor, but also in agriculture. The land holdings in India are small, and that makes crop cutting not an easy game to monitor. However, the farmers must be indemnified, and technology is what is coming to the rescue. We also have lessons from the health insurance, especially the government schemes, where the success or the lack of it depends on how well you and closely you monitor the scheme. The use of apps and the likes are making the scheme worth its while. Internet of Things or IoT in healthcare, which has received a tepid response till now, may well revolutionize monitoring in real time in the days to come.
In 2018, less than half of the world's natural catastrophe exposure, which was some $225 billion was covered by insurance. At national level in India, for example, there's a $27 billion insurance gap, and in some classes of business, the problem is acute. Today, some 60% of agricultural crops remain uninsured. Lloyd's City Index research shows that underinsurance could cost 10 of the largest cities in this country some $15 billion annually in terms of lost economic output. Underinsurance is not just confined to the emerging economies either. The economic loss of the 3 hurricanes in the United States in 2018 was 4 times the insured cost at $400 billion. So as an industry, we have to ask ourselves why people do not buy more of what we sell. Those insurers that have embedded innovation within everything they do, or who partner with innovative reinsurers, will be best placed to cater to the rapid changes in risk profiles and the customer needs of the next decade. Technology will continue to disrupt the insurance industry. We've seen this already in motor insurance in the United Kingdom, with over 80% of premiums transacted online, and most of this through price comparison websites. Brokers have become all but irrelevant in the motor market in the United Kingdom, and Lloyd's too has lost market share in motor insurance in the United Kingdom, as our cost structure has been too high to compete. This disruption will extend to other classes of business, and risk will continue to be commoditized. The disruption of the distribution chain is forcing both brokers and underwriters to think about their value proposition, because those that don't add value are going to be vulnerable. Artificial intelligence and robotics are still underdeveloped, but no one doubts their potential to replace many of the repetitive jobs that humans do in broking and underwriting businesses. Here in India, where brokers account for 85% of all reinsurance placements, and in the Lloyd's market, where business is 100% dependent on brokers, technology will have a transformative impact on distribution costs. And we all need to be thinking about what we need to do to stay relevant as these changes happen.